Hi students, I am Dr. Velavan, Faculty, School of Management, Shastra, Deemed University. Now we are going to discuss about the types of motor vehicle. See, as per the Motor Vehicles Act, for the purpose of insurance, the vehicles are classified into three broad categories such as private cars, motorcycle, then commercial vehicles. The first one is private cars or private vehicles. Okay, the private car insurance covers the motor insurance needs for individuals and businesses using private cars as opposed to goods carrying vehicles, passenger carrying vehicles, motorcycle and special types vehicles. Then private vehicles includes private cars, vehicle used only for social, domestic and pleasure purpose. The private vehicles, two-wheelers including motorcycles, scooters, autocycle, mechanically assisted pedal cycles. Okay. There are different categories of vehicles playing on the road in accordance with the provisions of the Motor Vehicle Act. Number one, private vehicles. It includes motor vehicles and private car, two-wheelers, etc. First, you have to know about motor vehicle. Any mechanically proposed vehicle used upon roads and includes a chassis to which body is not attached and trailer, but does not include vehicle run or fixed rails or specifically adapted for use within the factory premises. Private cars. Private car is a type of vehicle used for social, domestic, pleasure and professional purposes and not for carriage of goods other than samples, excluding use of vehicle for hire or reward, then pacemaking reliability, then trial and speed testing and use for any purpose in connection with motor trade. Two-wheeler. It includes motorcycle is mechanically self-propelled two-wheelers with gear or without gear, but a kick-starter vehicle is treated as a geared vehicle for insurance rating. Then scooter. It is a mechanically propelled two-wheeler with variable gears. The last one is what? Auto cycle. The pedal cycle mechanically assisted by a motor engine up to the 75 cubic capacity. The valued policies can be given for vintage car only, but for the sum assured that equal to agreed sum and for total liability should be gross total liability minus no depreciation. Okay. Then commercial vehicle. The second category you have to know is what commercial vehicle. So what is commercial vehicle and what are all the vehicles are included or including in this category. Okay. The commercial vehicle is any type of motor vehicle used for transporting goods or paying passengers. The European Union defines commercial motor vehicles as any motorized road vehicle that by its type of construction and equipment is designed for any and capable of transporting whether for payment or not. But here you have to know two important points. One is for more than 9 persons including the driver and goods and standard fuel tanks. These include by and large the goods carrier vehicle, trailers and vehicle used for carrying passenger on hire or reward or miscellaneous special type vehicles. Okay. Goods carrying vehicle. It is also called private carriers. Okay, the owner of the transport vehicle who use the vehicle only for carriage of goods which are his properties or carriage of goods which are necessary for the purpose of his business. This is called what? Carrying goods vehicle in private carrier. And goods carrying vehicle in public carrier. The owner of the transport vehicle who used in the vehicle only for carriage of goods which are not his properties or carriage of goods which are necessary for the purpose of his business. Okay. Then third category of vehicle is called public service vehicle, a motor vehicle used for carrying passenger and including motor cab, contract carriage and stage carriage. Okay. The motor cab taxi, motor vehicle used to carry not more than 6 passengers excluding the driver for hire or reward. Then contract carriage, motor vehicle which carry passenger for hire or reward under a contract and the vehicle used as a whole for an agreed sum either on time basis or point to point basis. Then stage carriage, a motor vehicle which can carry more than 6 passengers. A motor vehicle which can carry more than 6 passengers, excluding driver for hire or reward, with fares paid by individual passenger for the whole journey or for stage of the journey. So this is for what stage carriage. Then miscellaneous type of vehicles. Okay, all other vehicles which do not fall under any of the categories listed above are classified under this category. Example are ambulance, tractor and trailer, and road rollers, then excavators, etc. Policy schedule wording regarding limitations as to use and driver class is important to remember, specifically when limitations as to use in imposed as below in such items. Okay. Then agricultural and forestry vehicle used only for agriculture and forestry purposes. The policy does not cover use for hire or reward or for racing, pacemaking, reliability trial or speed testing. Use for the carriage of passenger for hire or reward. Use whilst drawing a greater number of trailers in all than is permitted by law. Then ambulance and harnesses, okay, and then hearses. Use only for ambulance purposes. The policy does not cover use for hire or reward for racing, pacemaking and reliability trial or speed testing. Use the whilst drawing a trailer except the towing. Towing other than for reward towing, and this is very, very important. Any one of disabled mechanical propelled vehicles. Then second one is in case of then hearses and substitute use only as the hearsay. Okay. Then cinema, film recording and publicity van, delivery trucks, then pedestrian controlled trolleys, then goods carrying tractors, vehicle used for driving the tuition. Okay. Now use in connection with this with the insurance business, the policy does not cover use of hire or reward for pacemaking, reliability trial or the speed testing. Okay, the speed testing. Then use for carriage passenger for hire or reward. The use whilst drawing for drawing a trial except the towing other than for reward of any one disabled mechanically propelled vehicle. So no, here you have no important note. In the case of vehicle used for driving tuition and the words other than for the purpose of driving tuition after the words hire or reward. Third one is crane, then breakdown vehicles, mobile crane and goods carrying vehicles having a crane as a part or fix the vehicle or trial. Okay, use in connection with the insured business. The policy does not cover use for racing, pacemaking, reliability trial or speed testing. Use for the carriage of a passenger for hire or reward. Use whilst drawing a greater number of trailers in all than the permitting by law. Then the next category is dumpers, dust cars, then water carts, road sweepers and tower wagons, mechanical navies, then shovels, then crabs, the excavators, the mobile plant, the road roller and site clearing and leaving a plant and tar sprayers. These are when you are going to take the policy, motor vehicle policy of the above vehicles used in connection with the insured business, The policy does not cover use of racing pacemaking, reliability trial or speed testing, use for the carriage of passenger for hire or reward, use whilst drawing trailer except the towing other than for reward for anyone disabled mechanically propelled vehicle. Then fire brigade and salvage corps vehicle. Here the policy does not cover use for hire or reward or for racing pacemaking, reliability trial or speed testing, and use for the carriage of passenger for hire or reward, use whilst drawing a trailer except the towing other than reward of anyone disabled mechanically propelled vehicle. Then mobile shop and canteen, okay. Use in connection with the insured business, the policy does not cover use for hire, reward or for facing pacemaking, reliability trial or speed testing. Then use for the carriage of passenger for hire, reward. Okay, I hope all of you understand. Now you see the next category is driver class as applicable for miscellaneous vehicle. So here any person including the insured, then provided that the person driving holds an effective driving license at the time of the accident and is not qualified from holding or obtaining such a license. Okay, the provider also that the person holding an effective learner's license may also drive the vehicle, and that such a person satisfies the requirements of Rule 3 of the Central Motor Vehicle Rules 1989. Okay, when the vehicle is used for transport of goods and the following words, when not used for the transport of goods at the time of the accident, when the vehicle is used for transport passenger, added the following words, when not used for the transport passenger at the time of the accident. Okay, so these are the slogan they have to return, they have to write at the time of accident. Okay, then motor insurance policy and types. Okay, this is very important. Here we are going to discuss about what are the various types of motor insurance policies are available. A motor insurance policy is a stamped document which forms the evidence of contract of insurance. Okay, in the event of a dispute, the terms and conditions embodied in the policy are referred to in the court of law. Okay, policies issued by the insurance companies have the following sections. Okay, the preamble clause. This clause introduces the parties to the contract, namely the insurer and the insured. The recital clause. The recital clause expresses what is agreed between both parties and narrates the period of insurance and about the consideration. And the operative clause. The operative clause speaks about the perils covered, then exclusions and general exceptions. The schedule clause. This clause talks about the subject matter of insurance covered along with the terms and conditions applicable to the policy. Then attestation clause. This specifies the duly constituted authority to issue policies, namely the authorized signatory. The above are the various sections that are commonly to insurance policies. In line with the above, motor insurance policy deals with the following sections: the parties to the contract, namely the insurer and the insured, the perils covered under the policy, specific exclusion, then greater exception, then conclusion. So these are all the points. We have to keep in our mind at the time of taking motor insurance policy. Okay. The insurance covers requirement also may vary depending upon the following parameters: the types of use of vehicle, details of the vehicle, age and experience, past claim experience, the previous insurance if any, value of the vehicles including accessories fitted thereon. The various motor insurance policies are explained in detail as follows. act only policy. I mean third party liability towards death and bodily insured and or property or damages. Okay. Then second one is comprehensive policy. Then third one is act only with fire and or theft. Then fourth one is fire and or theft only. Fifth one is motor trade policies. Then sixth one is internal road risk policy. These are all the types of policies. There are 6 types of policies. Now we are going to discuss one by one in detail. Okay, what is what? Act only policy. Okay, it is the minimum cover. Required under the Motor Vehicle Act, and provides compensation for death and or bodily injured or property damage to third parties out of use of motor vehicle in the public place, for which the insured is liable to pay. The exist of liability is as per the Motor Vehicle Act. Comprehensive policy, an insurance policy which covers accidental damages to the vehicle involved in an accident, along with or in addition to the third party liability. Third one is the act only and fire. Okay, act only and fire and theft. A restricted cover under comprehensive policy by which the insurer accepts to insure the risk of fire and theft only of the vehicle to be insured in addition to third parties liability. This decision is taken by the underwriter after considering the various factors such as make and model of the vehicle, then the declinature of the insurance by previous insurers, past claims experience, etc. Then fire and theft risk. Okay, this cover is general. This cover is given if the vehicle to be insured is laid up in the carriage of if it is remain uninsured. Then laid up vehicles. Laid up vehicles is one which is laid up in the carriage and not in use for a period of 2 consecutive months or more, and not left for repairs due to an accident. Then concession is provided for such vehicle, provided the period of the suspension should not extend. Okay, 12 months from the original expiry date of the policy. Usually they will consider only 12 months. The lay-up period will be counted from the date of surrender of certificate of insurance. Then next policy, sixth policy is motor trade policies. Motor trade policies are designed to extend the facility of insurance to motor vehicle manufacturer, dealer and repairer who deal with motor vehicles that remain in their custody as part of their trade. Trade policies are given to those who are authorized to have own trade plates by registered transport authority. This policy takes care of damage to the vehicle, then bodily insured and third party death. This insurance is unlike to the normal motor insurance policy given to the registered owner of the vehicle. Then seventh one is transit risk insurance. This policy is issued to manufacturer or dealers. This policy takes care of transport risk during the period of transport from the one place to another. Usually the vehicles involved are unregistered and uninsured under normal motor policy. The next topic is scope of motor insurance. Number 1, underwriters and insured mutually agree to the scope of the contract and other terms and conditions such as insured perils, conditions to the contract to be observed by the insured and the insurer during the currency of the policy, and the value for which insurance is done, the period of the contract of insurance, then procedure to be followed in case of material alteration, the rate of premium compatible with the risk covered, then risk of the insurers. The next one is what duties of the insured, then general exclusions and specific exceptions which are outside the scope of the contract, the procedure to be followed in the event of claim, the termination of contract. So these are all the important points or the scope of what motor insurance. Okay. The next topic is peril insured in motor policy. Okay. Then accidental external means the happening of something unexpected or unforeseen, and it excludes loss arising from natural causes within. The word external refers to outwardly visible. It means that what is not internal. Okay. Number one, fire, explosion, self ignition or lightning, then burglary, then housebreaking or theft, the riot and strikes, then malicious act and terrorism damage, earthquake, fire and shock damage, then flood, then whilst in transit and transit by rail, road and inland waterway, lift or elevator or air, then landside or rockside, self ignition, it appears to include the damage or loss caused by the internal defect of the car, which is the direct cause for fire. Okay, these are all the perils insured in motor policy. Okay. Exclusions. Next one is exclusion. The company will not be liable to make payment in respect of consequential loss, depreciation, wear and tear, mechanical and electrical breakdown, and failures or breakages. Okay, here the company is not responsible for the following. Then damage to tires and tubes. Normally 50% is allowed if prove that the damage is only due to the misshape. Okay, suppose they prove, they will give a compensation. Any accidental loss or damage suffered whilst the insured or any person driving with the knowledge and consent of the insured is under the influence of intoxicating liquor or drugs. Okay. Here now these are all the exclusion from the policy. Okay, motor vehicle policy. The next one is rating. Tariff and motor risk. Okay, tariff for motor trade risk. Low transit risk. Tariff for motor trade. Road risk should be loaded. In other words, the extra premium must be charged for any risk likely to happen during the transit of cargo or motor vehicle. Tariff for motor trade for all internal risk, that tariff provide for 48 general regulations. Okay. Then liability and policy. According to the new section 147(1), the liabilities incurred by the user of the motor vehicle should be covered by insurance in order to satisfy the requirements of Insurance Act, Motor Vehicle Act, 1988. Okay, these liabilities are also referred as compulsory insurable risk. According to the Act 1988, it is necessary for a motor vehicle to be insured against the user liability for death or bodily insured to third party. The policy amount is fixed by the Act. The next one is the extension of geographical area. The geographical area of motor policies may be extended to include Nepal and Bhutan. This can be done by charging a flat additional premium of 500 per vehicle, 100 per vehicle irrespective of the class of vehicle for package policy and liability policy respectively. Such geographical extensions, however, specifically exclude cover for damage to the vehicle, injury to its occupants. Okay. Regarding the liability in respect of the vehicle during air passage and sea voyage for the purpose of ferrying the vehicle to the extended geographical area. Okay. And the next one is valued policies. Here you have to know what is value policies. Under the agreed value policy, as specified, sum agreed as the insurance value of the vehicle is paid as a compensation in case of a total loss or consequential total loss of the vehicle without any deductions for depreciation. The motor tariff permits the issue of such policies only for a vintage cars. Okay. A vintage car is any car manufactured prior 31st December 1940 and duly certified by the Vintage and Classic Car Club of India. The next important one is cover note. Okay, here we have to discuss what is cover note. The cover note is an unstamped document issued based on the details given in the proposal form, confirming the acceptance of the risk from the date and the time of receiving the consideration, premium. This document is issued immediately only under the circumstances where the insurance of the policy is not feasible. This cover note is it's a replica of the policy to be issued. The validity of the cover note is only 60 days, which can be further extended at the option of the insurer if necessary. Okay, so this is called what? Cover note, my dear student. Okay, then next one is policy form. After a contract has been concluded between the proposer and the insurer, it is recorded in a document called a policy. Okay, the policy is not the contract, but only the evidence of it. Okay, in the event of a dispute, it is the policy to which the attention of the court will be drawn unless the insured brings the evidence to prove that there is a discrepancy between the policy and the fact. The next one is what? Endorsement. From time to time, it is necessary to make alterations in the wordings of a policy to take note of changes in the material fact submitted earlier in substitution for one item to another. It would be costly and time consuming to issue a new policy for even alteration. Therefore, changes to the original policy are noted by way of issuing an endorsement. Okay, this is called what? Endorsement. The next one is period of insurance. Usually, the insurance is offered only for 12 months, as most of the insurance contract, including accident and liability insurance, are usually annual policies. When the liability of the insurer commences under the contract of the policy is set to attach, or in other words, the risk is set to attach, or it means to run from the time. Okay. The next one is duties of the insured at the time of taking insurance. Okay, this is very important. The duties of the insured at the time of taking insurance. The following are the duties of the insured at the time of taking the insurance. Okay, the insured should declare all the materials fact relevant to the risk for which insurance is sought, such as type of vehicle, purpose of usage, then model of the vehicle, age of the vehicle, etc. The history of the second one is history of past claims. Already they have claimed anything, and now they have to produce the document regarding that. Okay, the name of the previous insurers, if any, who have declined accepting the risk offered for insurance or cancelled the policy. Then fourth one is maintenance of the vehicle, in the most efficient manner as though he is uninsured. Then the fifth one is the insured should bring to the notice of the insurer fact of any alterations subsequent to the insurance of the policy. Example, accessories insured should remain in the vehicle during the entire period of insurance. Then sixth one is it is the obligations of the insured to declare any accident that have taken place, whether material or not, to the insurance. Okay. The next one is motor insurance premium. Here we have to discuss the following factors determine the quantum of premium. One is insured declared value of the vehicle, then additional accessories. Then third one is extra fittings like electronic and non-electronic item. The next one is type of vehicle and age of vehicle and model of vehicle, age and center of the owner, driver, geographical zone where the vehicle is playing, then cubic capacity, seating capacity, the gross vehicle weight, then perils covered. The next one is combination of risk like comprehensive cover, third party and fire and theft, then past claims experience, the fuel type, then profession of the owner, voluntary deductible, no claim bonus, then anti-theft device installation. So these are all the points. These are all the points or factors we have to be considered at the time of fixing the premium. Because the contract of insurance comes into force only when the consideration is paid by the insurer who premiums to identify premium to indemnify the insured in the event of claim. It is a preconditions that premium ought to be collected prior to the commencement of risk upon which the promise of the insured rest. Okay, the insured rest. The insurer can turn down the liability if consideration is not paid prior to the occurrence of loss. The consideration so paid by the insured is known as premium. The Insurance Act is very specific and empathetic that the collection of premium in advance to the commencement of insurance contract is an absolute necessity, and any breach in this regard will be termed as a violation of the Act under section 16 VB. In turn, the insurer can reject the claim if loss arises. So section 64 VB has to be complied with each cases. Okay. And already we know what are the points, what are the factors we have to discuss at the time of fixing the motor insurance premium. Then annual premium. As motor policies or annual policies, the premium consideration is collected for 365 days. Because the premium will collect based on your type of policy which you have taken. Okay. It is not permissible to insure for more than 1 year under motor insurance. Then next one is pro rata premium. Under some circumstances, depending on provisions made available in the tariff, premium is charged in proportion to the number of days for which the risk has been enforced. Such premium is known as pro rata premium. Situation where pro rata premium is charged are due to the change of ownership of the vehicle, the insurance get transferred to the new owner. This may happen during the currency of the policy period, and the new owner may like to have the extension of policy period so that he gets an insurance policy for not more than complete 12 months. The insured can get such extension of policy with a suitable premium for additional period of insurance without letting the insured to have a revised policy for a period more than 12 months. Some insured desire to revise their policy period to coincide with the financial year or assessment year. When the insured desire to enhance the value of vehicle during the currency of the policy in order to copy the market value. Any additional extra items like electronic or non-electronic item subsequently fitted in the vehicle can be added to the value of the vehicle insured during the currency of the policy with suitable additional premium. Sometimes the insured may desire to opt the extraneous perils like earthquake, flood, riot and strike during the currency of the policy, which he had originally opted out by enjoying reduced premium. Okay. The next one is short period premium. There are occasions where the insured needs insurance for a period less than 365 days. Such facility is allowed, but the insured has to pay the premium on short period basis. The premium for short period is slightly higher than the regular premium rating factor. It means the policy for short period is more expensive than normal annual policies. Situation under which short period premium is collected may be when the policy is issued for a period less than 12 months and when the policy is cancelled at the request of the insured. In this situation, short-term premium is possible. Then premium rebates. Okay. The insurer recognizes the merits of claim-free client and claim-free client. Okay, merits of claim-free client, and the premium of renewal period is reduced by way of bonus. The bonus is rewarded on premium for the value of the vehicle and not on premium for third-party liability. Tables of no claim bonus are provided in the tariff for different categories of vehicle. The next type is vehicle used in own premises and confined sites. The reduction in premium is allowed if the vehicle is not licensed for road use and used in own premises where public have no access to. A similar discount is allowed for goods carrying vehicle which need not be registered and which are used in confined site where public have no access. Okay. The next one is very important one is what the vehicle is specifically designed for handicapped person. This is very important. A discount in premium for vehicles which are specifically designed for and used by handicapped person and institutions engaged exclusively in the service for handicapped and mentally retarded is allowed, of course, as per provisions of the Motor Vehicle Act. Okay. The next one is the Automobile Association membership. If the insured is a member of a recognized automobile association, a discount of 5% shall be granted subject to maximum of ₹50 for two-wheelers and 100 for private cars. Then the next one is voluntary excess discount. Some insured decides to avoid preferring insurance claims to the extent which can be borne by them within the financial limit. This is called insured bearing first option of each and every claim arising out of accident. Okay, the premium is reduced based on the quantum chosen by the insured as per tariff guidelines. The next one is third-party liability premium rates by IRDAI. It is important to note that liability premium is fixed by the insurer. It is the minimum statutory premium to be paid as fixed by the IRDAI. The liability premium amount depends on the engine power of the car. The premium increases with the increase in cubic capacity. The third-party liability premium chart released by the IRDA for the financial year 2017-18 as follows. Then next one is change of vehicle. This is also very, very important. A vehicle insured under a policy can be substituted by another vehicle of the same class for the balance period of the policy, subject to adjustment of premium, if any, on pro rata basis from the date of substitution. Where the vehicle substituted is not a total loss, evidence in subject of continuation of the insurance on the substituted vehicle is required to be submitted to the insured before such substitution can be carried out. The vehicle subject to hire purchase agreement, vehicle subject to lease agreement, and vehicle subject to hypothecation. The motor policies are not insured in joint names. Okay, in this category, the financial interest are only recorded by attaching or invoking the respective endorsement numbers in the name of the financier or hire purchase and hypothecation, etc.